I analyse Perth's property market. Apartments are doing something strange. I've been inside more Perth apartment transactions in the last 6 months than most agents see in a couple of years. And I keep finding the same pattern over and over again. Something that headline numbers don't fully explain. Something that's frankly most buyers and investors are completely missing right now. So today I want to take you inside the data, the real data from real transactions, and show you exactly what I've been seeing. Because if you're watching the Perth property market right now, this changes things. Hi, I'm Simon Atkins, your brand new off-the-plan apartment specialist right here in Perth, helping you with relevant info and options so you can more easily navigate the specialist part of the property market. So, most property content you'll find online is based on public or publicly available data, median prices, auction clearance rates, CoreLogic reports. And look, that data matters. I use it myself, but here's the difference. As someone who is inside off-the-plan apartment transactions every single day right here in Perth, talking to developers, working with buyers, watching contracts go from signing through to settlement, I get to see a layer of the market that most commentators never access. I see what buyers are actually paying. I see who is buying and why, and I see where the pressure is building before it shows up in the published numbers. And right now in 2026, there are 3 things I've been tracking that I think every Perth property watcher needs to understand. So let's look under the hood a little bit and just see what we can find. We're going to cover the price gap that is quietly closing, who is actually driving this market right now and what that signals, and then the one finding that genuinely stopped me in my tracks when I looked at the numbers. Stick around for the third one because it goes directly against what most mainstream commentary is telling you. So let's start with the data, specifically the gap between off-the-plan apartment prices and established apartment prices here in Perth. Now, most people hear the words off the plan and immediately one word comes to mind: risk. And I get it. There have been markets, particularly on the East Coast, where buyers contracted off the plan, got to settlement and found that the property had actually fallen in value. This is a real thing that happened to real people. But here's what the data is showing me right now here in Perth. In several of the precincts I work in most closely, apartments that were contracted 2.5 years ago are now selling at figures that, well, when you compare them to what equivalent established stock is currently achieving on the open market, look like a significant discount. Get your head around that one. In practical terms, the buyer who signed a contract on a new Perth apartment in 22 or 23 locked in a price. The market has moved considerably since then, and when they settle today, they are walking to a property that is already worth more than they paid for it. According to CoreLogic data, Perth units values have posted some of the strongest annual growth of any capital city market. And according to REWA, listing volumes remain historically constrained, although they have moved up a bit, which means that established stock, when it comes to the market, is being competed for quite hard. So the gap between what you pay off the plan at signing and what you pay for a comparable established property today is closing. In some pockets it has already closed. Now, does this mean that every off-the-plan project in Perth is a guaranteed winner? Absolutely not. There are still developments I would not touch, and we can talk about that another time. But as a broad market dynamic, the risk profile of off-the-plan in Perth in 26 looks very different from what it looked like in Sydney in 2018. Very different. Sit with that for a second, and now let's look at who is actually driving this market, because this is where it gets interesting. So who is buying Perth apartments right now? Because here's the thing, the buyer mix in this market has shifted materially in the last 12 months. And in my experience, when the buyer mix shifts the way it's shifting right now, that is one of the most reliable leading indicators of where prices are heading next. Let me break that down. 12, 18 months ago, the buyers I was working with were predominantly 2 groups. Local owner-occupiers, people who lived in Perth, knew the market and were making a lifestyle or upsizing decision, and a smaller group of local investors who have been watching the market and felt the timing was right. So Perth buyers buying in Perth makes sense. What I'm seeing now is a third group that has actually grown significantly, interstate investors. Buyers from Melbourne, Sydney, Brisbane who have been watching Perth from a distance, doing their research, running the numbers, and they have started moving. I had a conversation with a buyer recently. He'd been watching the Perth market from Melbourne for about 18 months or so. He wasn't in a rush. He told me, Simon, I keep waiting for it to slow down, but every time I look, it's moved further. He ended up what we call chasing the market because the bank deposit got larger the more the market grew. I told him that he had 2 years up his sleeve in which he could lock in the price now and then continue saving. So let me repeat that. Lock in the price now and then keep on saving for the deposit until settlement on the property in the future. And so he moved. That is not an isolated conversation. I've had a version of that call more times in the last 6 months than I can count. And it matters because interstate investors watching a market from a distance are typically the last group to move. They need more conviction, they do more research, they're not buying on emotion. When that group starts to activate, that's a signal. Now let's add one more piece of data on top of that. According to the ABS, Western Australia's population is growing at a rate that is placing enormous sustained pressure on housing supply across the board. The majority of that population growth is settling in the Perth metro area. These are people who need somewhere to live. So you have constrained supply, rising established prices, local buyers competing, interstate investors activating, relocators arriving. And the question I keep asking myself, and I'd like you to think about this, is if the buyers who have been watching most carefully from the outside are now moving, what does this tell you about where the market is heading? Let's go to the third data point. This is one that got my attention the most. So, rental yields. This is the one that most investors I speak to haven't fully processed yet because the conversation around Perth property has been so dominated by price growth, the capital gains story, that the income story has been quietly flying under the radar. Here's what I've been looking at. Perth apartment rental yields right now are at a level that when you compare them directly to house rental yields in the same city, tells a story that I think will genuinely surprise you. Now, historically, apartments have yielded better than houses. That's well established. But the gap that's opened up in Perth specifically between apartment yields and house yields is not a typical gap. It's a function of two things happening at once. Firstly, apartment prices have grown strongly, yes, but rents have grown even faster. And because the supply of new rental stock has been so severely constrained, I've spoken about that construction viability crisis in Perth before, there is simply not enough rental product coming to the market to meet demand. According to SQM research, Perth rental vacancy rates have been at crisis levels. We're talking about figures that if you showed them to someone unfamiliar with the market, they would not believe were actually real. And the result, you can currently achieve rental yields on well-located Perth apartments that are outperforming house yields in comparable areas. Now let that sink in for a second. You have an asset class that is one, showing strong capital growth, and two, generating superior income yield, and three, in a market where new supply is structurally constrained for the foreseeable future due to construction costs. On top of that, you get even more added cash flow from being able to depreciate new property. In my experience, that combination does not persist indefinitely. Markets find equilibrium, yields compress as prices rise, or supply eventually catches up. They got the Perth apartment story terribly wrong for a long time, let's just say. The data now is telling a very different story. So, 3 data points: the off-the-plan price gap that is closing, the buyer mix shift that signals where momentum is heading, and the yield story that most investors haven't fully priced in yet. Now, what do you actually do with all of that? Before I get into the practical takeaways, look, if any of this is resonating with you and you're actively thinking about buying an apartment in Perth, whether as an investor, a first home buyer, or someone relocating here, feel free to reach out. My contact details are in the description below. I work with buyers on exactly this every single day. Happy to have a conversation about your specific situation. All right, let's talk about what this actually means for you. So depending on who you are watching this, the implications are a little bit different. Let me quickly break it down for you. If you're an investor, the yield and growth combination I've just described doesn't show up very often, and the window on off-the-plan pricing before the gap to established stock fully closes is not unlimited. The question worth asking right now is not should I buy, it's where specifically and what project. That's where the due diligence matters enormously. If you're a first home buyer, the price gap I described in Reveal 1 is actually working in your favour if you move now. The Perth government has grant incentives attached to new builds that don't apply to established stock. Off the plan structured correctly can give you a longer runway to prepare financially before settlement and contain price growth at the same time. But the window in that gap is narrowing. And if you're relocating to Perth, I see this regularly. People arrive here, they rent for 6 months, they watch prices move, and they say, I wish I'd bought when I first got here. The data is not pointing to a slowdown. Western Australia's economic fundamentals, resources, population growth, infrastructure spend are all pointing in one direction. The Perth property market in 2026 is complex. For many people, it feels stressful and uncertain, particularly after the budget, and I understand that. But when you look at the data clearly, really look at it, it is actually pointing in a pretty clear direction. And the apartment sector specifically is one that I think deserves a lot more attention than it's actually currently getting. So I'd like to really know where you're at. Are you currently watching the Perth apartment market and trying to make sense of it? Are you an investor running the numbers from interstate? Are you a first home buyer trying to figure out whether off the plan makes sense for your situation? Drop your situation in the comments just below the video here. I read every single one and I'm happy to respond. And if you want to stay across the data as this market continues to evolve, because it is moving fast right now, make sure you hit subscribe. I'll have another market update coming very, very soon. I'm Simon Atkins. I'll see you in the next one.